I think it's two macro trends coming together to create a tsunami wave, perhaps. I don't know if that's the right metaphor, but so we start the business 2015. There are other technology lenders that are out there who are also doing their thing, and really the focus at that point is go find companies that are willing to pay, and we're going to help them create value for their own businesses in a better way than they've been getting it and deliver return. But the end investor in those scenarios were always like angel investors or in small institutions. And so that system built up over a couple of years, and we built and proved and proved and started to deliver some returns and got better at it. And we drove down the cost of doing what we do. And then at the same time, of course, most of the viewers on this will know that, the public market investment advisory business is coming under pressure for fees coming down and, just the proliferation of ETFs and, a whole bunch of sort of pressure on their side where they're looking for new product to be able to offer yield or other kinds of returns to their investors. And so you take those two macro trends, and somewhere in the last 5 or 6 years, those two kind of converged and became one trend where we're finding we are able now to provide, with the kind of regulatory support that's necessary, the ability to go out to advisors and retail investors and offer them the ability to partake in giving a private loan to a private company, and to do that through registered accounts. That is one big basket of innovation that happened on the back end, so that we could now take the yield that we're making and pass it all the way through to an investor broker to a brokerage account. The second trend was that that kind of yield we're able to deliver is well in excess of anything else that's sort of out there in that same risk basket. So now investment advisors are able to partake and participate in these loan pools, and to get good vision, which is one of the critical improvements in the system, is they're able to see the underlying basket of loans, and they're able to know what they're invested in and to know how those loans are performing. And they get that kind of data through the technological innovations that we've created. And they're able to get yields that they can offer to the customers, 8, 9, 10%, that are typically well in excess of sort of what other kind of private options might be out there. And, the investors are happy to be getting the yield. The advisors are happy to be offering them new products. And they're able to get them a portion of their portfolio at a sort of certain risk level that really works out on a diversified basis across that portfolio return. So those two trends of the improvement in what we're able to do and offer, and the transparency and the return, with the market at the same time, the advisor market looking for new product to try and battle what's going on inside the space. Those two things coming together, I think, are very powerful forces.